Gas Wars, exposing the secrets of a silent giant. The numbers are staggering, and the industry is not going away. The US possesses the most extensive gas pipeline delivery network in the world. More than 189 million Americans and 5.6 million American businesses use natural gas. And America's natural gas utilities invest $33 billion every year in capital and maintenance projects for distribution and transmission systems. So, to understand and profit, follow the money. Let's dig in. Could Trump kickstart a sleepy LNG sector? Liquefied natural gas, or LNG, is likely to benefit the most under a second Trump administration compared to a Biden continuation. Biden's stricter environmental regulations have halted new LNG projects due to environmental concerns, a shift following the recent classification of natural gas as a transitional fuel at the COP summit. Under a Trump government, for example, these LNG projects could quickly gain approval for several reasons. 1. They create many jobs, reducing unemployment. 2. These positions offer high wages in both construction and operation. 3. Once operational, they provide significant, stable corporate tax revenue. 4. They align with Trump's goal of energy dominance. The US, currently the top LNG exporter worldwide, owes much of this status to Trump's 2016 energy policies. These, coupled with lower interest rates, enabled companies like Cheniere, Sempra, and Energy Transfer Partners to start building LNG infrastructure. The chart below illustrates a sharp rise in US LNG exports. The challenge for Trump is if he hits China with tariffs. Naturally, China's going to retaliate. One of the ways China may do that is by refusing to buy US LNG. However, currently China is not one of the USA's largest consumers of US LNG. The next chart shows total American LNG exports from January 2022 through to October 2023. As you can see, the US has directed the vast share of its LNG to Europe and the UK. This means that tariffs or bans on US LNG cargo would not be catastrophic for the US LNG industry. It's likely that cargoes could be rerouted. But regardless of who wins the election, Pacific gas wars are here. With that said, Asia is a true growth engine for LNG for the next 15 plus years, and China will be a key demand driver. It's expected that China could represent up to 40% of future LNG demand out to 2035. The challenge for China is that domestic gas producers currently provide about 55% of total natural gas consumption. By 2035, domestic gas production is expected to be in the 40% range. Russia, Australia, and the US are expected to be large suppliers of natural gas to China. Trump's term can only last 4 years, but damaging an already delicate relationship with China could present a challenge later in the decade. The LNG sector is incredibly complex with many moving pieces. Here's an example of a real scenario that could occur. 1. A company sources natural gas in Canada. 2. It transports the gas across North America. 3. It compresses the gas in Texas. 4. It ships the gas to Asia. 5. Decompresses the super-chilled natural gas for the user, who then 6. Transports it via pipeline to its final destination. You're likely thinking, geez, that sounds complex, lots of moving parts and expensive. Frankly, you're not wrong. Leasing a boat will cost upwards of $50,000 per day. Pipeline costs vary considerably depending on whether the contract is spot or part of a long-term arrangement, but could easily fetch 1 million BTUs, and insurance for the LNG, once it's in the water, also costs money. Next, you'll see a cost curve to ship LNG to Asia. As you can see in the blue, much of the US LNG is in the bottom half of the cost curve. For reference, the current selling price of LNG in Japan is $9.57 BTU, meaning almost all American LNG is profitable. We believe Biden's actions could create selling pressure on US LNG names. This could create a solid trading opportunity to buy on negative news and then use Trump's reinstatement of projects as a positive catalyst for the sector. A spotlight on a mysterious energy giant. We're tracking a major player in the liquefied natural gas market right now. The US leader, also a global frontrunner, is set to dominate over 50% of America's LNG exports in 2024, and it's becoming Europe's top supplier. The real winner of Europe's anti-Russian stance in many ways. In the year 2024, this entity will account for more than half of America's LNG exports, dominating as a top LNG supplier to Europe, which makes up 10% of Europe's total natural gas imports. Founded in the 1990s as an oil and gas firm, it pivoted from LNG importing to exporting after 2008, aligning with the shale gas boom. However, the shale gas revolution spurred a dramatic pivot, transforming it from an importer to a leading exporter of LNG. By 2010, this company was making bold moves, initiating LNG export infrastructure development at its flagship facility. By 2023, it completed 3,000 shipments, investing over $34 billion in LNG infrastructure. Expansion has been a key for this company, and now with 2 major ports, it can export up to 45 million tons of LNG yearly, driving significant revenue. The identity of this LNG giant? That remains our little secret for now for our subscribers to Catoosa's resource opportunities. Keep an eye on this one.
Subscribe to the KRO, which is the Catoosa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.